Okay, everybody, thank you very much for joining this lecture 4 session of scalping intraday trading. I'm going to show you in this session how to enter, exit, and hold the trade. I'm going to show you a stage-by-stage procedure, how to approach your entries, how to approach your exits, and how to approach you holding the trades. Now, guys, lecture 1, you learn the basic rules of price action. Lecture 2, you have learned the institutional levels, primary and secondary. In lecture 3, I have taught you guys the candlesticks formation. If you have previously have tried them on the charts, I'm sure you have seen the price has been effectively reacting from those institutional levels more than 80%. Is that the case? Say yes if that is the case. Price reacting from pivotal levels, guys, right? And guys, you need to understand not every reversal or every touch on a pivotal level, this is the first thing, not every touch on a pivotal level is an entry. It will go to profits all the time, but that's not going to happen, not every time. You need to understand this. So you need to have that acceptance that you're not going to have 100% results out of whilst you're approaching the trading. Make sense? You need to understand this. But guys, if you are winning 60%, 6 trades out of 10, then you will be more than 100% in profits, because in my training, the stop loss and risk and reward is not 1 and 1. It's 1, 2, 1, 3 in my intraday scalping trading, guys. Make sense? Everybody understand this? So guys, when you have a losing trade, the key is do not be scared. Follow the same method. Look for another opportunity, another entry. Trust me, your intraday entries, if are from the pivotal levels, you will be successful in your trading, guys. You understand this, all of you? Okay, good. Okay, guys, the first thing is the stage number 1. Whenever you take a trade, the first thing is you're going to start trading. You upload your indicator of pivots, right? No moving averages. Leave the moving averages for on the side for now. Let's start with basic price action, how to approach entries, exits, right? The first thing you will always do is H1 time frame. Trap the price. Everybody understand this, right? Everybody understands. So we will be going on H1 first, and we will be going to trap the price. That is the first thing. Okay, good. So everybody understand. Now, guys, the reason, let's consider the question why we're going to trap the price on H1, not on 15 minutes. If you're trading 15 minutes, if you're trading 5 minutes, it's just because H1 is a zoom out of the shorter time frames, and it's easier for you to see the bigger picture whilst trapping the price. Make sense, guys? Everybody understand? Say yes. Okay, then what? Then you go to, once you trap the price, by trapping the price, I mean establish the tracks, the channels, guys. Okay, establish the tracks and channels. Make sure you really trap the price. Again, I'm saying this, make sure you really trap the price. Now, guys, this is the trapping the price is from which lecture of scalping? Tell me, anyone? That's right, lecture 1. That's good. Good. That's right. That's good. Trapping the price is from lecture 1. You need to establish your channels. You need to establish your ascending tracks, ascending channels, descending channels. Now, guys, this is the first. That's what you do. The second thing you do is then zoom in on 15 minutes time frame, guys. Okay, everybody understand? Then you go to 15 minutes time frame, and that is where you will be trading. You guys understand this? Everybody understand this? Say yes. So we are trading on 15 minutes time frame, guys. Now, this is important, guys. Number 3, we will only be trading 15 minutes time frame, guys. Okay, we will only be trading on 15 minutes time frame. We are not going to zoom out or move to another time frame. So you guys try and understand, we are not going to maneuver within different time frames. That is it. You mark your charts, trap the price on H1, zoom into 15 minutes, and that is the only chart you're going to trade. That is the only time frame you're going to trade. Makes sense? You understand, guys? There is no moving in within different time frames that we normally do, guys. Do you understand this, guys? You need to follow these rules if you want to effectively trade this method. Everybody understand this? Okay, number 4. You will trade what you see, guys. Okay, you will trade what you see on 15 minutes time frame, guys. Everybody understand? So if, guys, H1 is bearish, you're not going to keep a bearish bias in your mind and approaching 15 minutes time frame. No, that's not going to be the case. You're going to trade 15 minutes time frame on basis of what you see on that particular chart in front of you at that specific time. Everybody understand this? Say yes. Everybody understand this? Say yes. Okay. Then guys, then what? You will grade A entry, guys, or class A trade. Grade A trade is trade from primary levels, meaning a pivotal level. So you will always take a trade from the pivotal levels, guys, and that is my advice, that is my strong suggestion, and the reason is that is a class A trade, that is a grade A trade, guys. Everybody understand? Say yes. Yes, James, what's your question? Quickly, James, ask the question, because I don't want to break the sequence of my lecture here. I don't want to take questions. Okay, focus. Okay, that's good. So guys, grade A trade is the trade from the primary levels. The primary levels are the pivotal levels. You understand this? Remember this. Remember this. The price journey is from one pivotal level to another pivotal level, guys. So the price journey is from one pivotal level to another pivotal level in normal circumstances. You understand this, guys? This is a general presumption. That is a normal presumption. The price will begin its journey from one pivotal level to another pivotal level. So if you're asking me a question, how long should I stay in the trade? The minimum answer is from one pivotal level to another pivotal level. That is what you have to focus, guys. You understand this? Guys, understand this? Say yes, please. All of you say yes. I see 45 people here. I want to see 45 yeses. Come on. Guys, what I'm going to teach you, if you really follow what I'm going to teach you, right, you will be a profitable trader. You will have to practice this. It will take you a month to get used to it, and eventually you will be a profitable trader. The key to be consistently profitable in this method is that you consistently apply the rules that I'm giving you here. That is the key. That is the key. The result is, guys, you can make easily 100 pips a day, 100 pips a day while just trading 3 pairs. Trust me, 3 pairs. That is the minimum. Weekly, 500 pips. A month, 2,000 pips. Now, how many of you have heard traders making 2,000 pips consistently? How many of you heard? So this is exceptional, guys. So please follow my instructions, what I'm teaching you. I've made more than 3,000 pips in a night, in one session, using the same method. Half of my portfolio was used to be scalping using this method, guys. It is an effective method, works all the time. All you have to do is to be consistent with the rules. You take a profit with consistently applying the rules, you take a loss with the same method. Never ever deviate, never ever deviate from these methods, guys. Okay, guys, please tell me you understand this. Say yes, all of you. Grade B trade, guys, is from secondary level. The grade B trade will be from the secondary levels, which will be your trend lines, which will be your trend lines, which will be what? Trend lines. The journey of grade B trade, the price will be to the nearest pivotal level, guys. You understand this? If you take a trade from a secondary level, the journey, the target will be to the nearest possible pivotal levels. Of course, I will discuss this in a second, guys. You understand this? Everyone understand? Say yes. Everybody understand? Say yes. Always try to trade in the direction of the trend. Guys, always try to trade in the direction of the trend. It means you open a pair, you didn't see a trading opportunity. If the trend was up, skip that pair, move on to the next one. Makes sense what I'm trying to say? If it makes sense, yes? Try to trade in the direction of the trend, but of course you can take reversal trades, guys. But these are the guidelines. Following these guidelines, you will see yourself making more than 1,000 pips at minimum, plus and minus. Makes sense? Always try to trade in the direction. And how you're going to identify the direction is by looking on the chart in which channel the price is traveling. You understand this, guys? If it's an ascending channel, it's an uptrend. If it's an ascending channel, it's a downtrend. Simple as. You understand this? James, you're going to trade on 15 minutes time frame. I didn't say 1 minute H1. So please focus on this. All you're going to do is to trap the price on H1, and that is it. Please listen to my instructions, guys, extremely carefully. Of course, you're going to determine your channels. Your trap is on H1. Well, that is the first instruction, H1, trap the price. I didn't say trap the price on 15 minutes, guys. Make sense? Okay, guys, well, let me show you the practical demonstration of these points. So the first thing is H1, trap the price. Meaning establish your tracks, your channels. Make sure you always trap the price on H1. Then you zoom into 15 minutes time frame, and that is where you're going to trade. You will only be trading 15 minutes time frame. You're not going to zoom out or in or go to another time frame once you're on that 15 minutes time frame. You will be trading based on what you see on that time frame, guys. Grade A trade will be from a primary levels, from a pivotal levels. Entries will be from the pivotal levels, guys. The journey of the price is normally from one pivotal level to another pivotal level, guys. So you also know the journey. Now, guys, grade B trade will be from the secondary levels, trend lines of the channels could be. And remember, your journey will be the nearest pivotal station, guys. So please confirm you understand what I said, and always trade in the direction of the trend, i.e. try to trade in the direction of the channel in which the price is. Now, guys, you need to follow these rules. If you're not going to follow these rules, you will see yourself be not consistently profitable traders using this method. You guys understand? Say yes. Okay, good. Let me give you an example right now of an EJ trade that you should have taken by using the basic principle, guys, basic principle. Today, I'm going to discuss entries, exits, and holding the trade. I'm not going to discuss the timings right now today, okay? I'm going to discuss the timings, why the price, why you should be taking your trades within those timings, things like this in the next lecture. Just pure implementation of the technical aspects of the first 3 lectures. Let's apply them. Guys, can you see the charts in front of you, right? This is H1 time frames. Step number 1. Everybody say this, right? Okay, okay, guys, give me a second. No, restore the cover to Kurana, EJ Kona. Okay, guys, now I'm going to trap the price, establish the channels, guys. Okay, I'm going to establish the channels and presume, guys, the price was here. Yeah, that's fine. Okay, you guys understand this, right? Everybody understand, right? Guys, I'm establishing the channels. That is where the price is. I'm establishing the channel. This is the low point, right? That is where the price is. Can you say this, guys? Everybody say this. I mark my channel trend line, support line to establish the track. Yes? Everybody understand this? Yes? Again, guys, your channels does not need to be precisely touching the points. All you need is a directional trap of the price. So it's, you don't have to connect the points together. All you need is to take the gist of what track the price is in. That's right. Okay, guys, please confirm if everybody understand this point, guys. This point, which I've just did, this is from lecture one, the price action that I've given you. You should be able to do this precisely because this was one of your assignments, right? Establish the bloody tracks. Yes? I'm going to establish more tracks for you. Previously, you should have this track, guys. Yes? Everybody understand and agrees with me? Say yes, guys. It's pretty simple. Stage by stage, we eventually approach the trade. Yes? Everybody understand? You will be doing this exercise on, let's say, 5 pairs, and then you go on 15 minutes and seek an opportunity to trade, guys. Yes? Everybody understand? Yes? Okay, I've trapped the price. I'm done with the trap of the price, guys. I'm done. Okay, I established the channel. So my question is, in which channel the price is in? Is it a buying, ascending channel or descending channel? Ask yourself this question, ascending. What do you do in ascending channel normally? Looking for buying opportunity or selling opportunity? Okay, buying opportunity, good. So what kind of trade should I be looking to enter today on ECHA, guys? Buy or sell? Buy, long, that's better. Good answers. Now let's consider this. So what I'm going to do, guys, I'm going to look for buying opportunities. Yes. This is where the day begins just right now. Yes. Everybody can see this, guys. I'm zoom into 15 minutes time frame. The day began, and that was my channels, right? Further establish if there is more track channels inside, guys. Can you see this? Yes, I connected this with this. Pretty simple, guys. Yes. The price was here when the day begins, right? The price was here when the day begins, and the price was approaching what I said, the class A trade will be the price approaches the primary level. This is the first primary level. The price approaches this level, guys. The bearish engulfing candlestick, the price approaches. That was the first step. Yes. That is so you will not take a trade on this 15 minutes candlestick. You will wait and see how the price reacts. Tell me, what is the trend? So we're going to look for only buying opportunities here. Okay, guys, this is where the price came in. The price came in, and this was the first step. And that is the next candlestick. The price fails to breach the low of this pivots. Yes. Yes. Okay, good. Guys, the thing is, when you're scalping, you really have to focus on the details on the charts. It takes more focus from you psychologically. Mentally, you have to be extremely strong. Focus on the charts. That's no turn away. That's right, sir. That's right. People think it's easy. That's bullshit. So this was your first failure, right? What is the name of this candlestick? Inverted hammer. Everybody understand this, right? The question is, should I take a trade on this? Not yet. You would not take a trade on this, guys. I told you there are two candlesticks you should be taking the trades on: a candle with a wick hammer, a candle with a thick body engulfing candlestick, guys. You will use your counter trend line as I explain you in lecture 1. Yes? Everybody understands so far, guys? Please confirm if everybody understands so far. Everyone understands so far. Okay, good. Just give me a second, guys. Okay, good. Everybody understand this, right? Now, what is this candlestick, guys? What is the next candlestick? Hammer, right? Okay, good. After this candle close, guys, you can take a trade, and this is an aggressive entry. Now, I'm going to show you, this is your aggressive entry. Your aggressive entry is before the break of the trend line, but the criteria has been satisfied on a pivotal level in which I have seen a hammer, guys. You understand this? Please confirm if everybody understand what I did. Okay, please confirm, guys. You understand this, right? Okay, guys, good. You took the trade, the next candlestick closes, fails to break the pivotal level. Can you see this, right? Fails to break the pivotal level. So the question is, should I stay in the trade or get out of the trade? Anyone? Exactly, same drill, same drill. The next candlestick, after every 15 minutes, now you have to watch. So this trading is for those people who can sit on their computers and watch every 15 minutes candle close, guys. If you cannot do this, do not trade 15 minutes, guys. Move on to high time frames. Do not trade scalping, because in 15 minutes, things can extremely change and surprise you. Made sense? Guys, the next candlestick reacted free, reaches the trend line. So that is where you should be in the trade. So that was the break and that was the retest. This is your buy conservative entry. You guys understand this? Please confirm you guys understand this. Okay, good. Now, guys, remember what I said, the price journey. What is the normal presumption, guys? The price journey is from one pivotal level to another pivotal level. That is a normal presumption. So that is what we will presume. That is what we will presume. But of course, things can change during the course of the journey anytime. The price start rising. Yes. The next candlestick, candlestick, candlesticks, and eventually the price achieved, and you should exit your trade here, guys. You guys understand this? Everybody understand this, right? Guys, use your reference line as a tool for retracement to stay in the trade, guys. So if the price retraces, price can still go up, right, guys? These are secondary levels, yes? So please confirm if you guys understand this trade, guys. Please confirm. I have taken an entry. There was an aggressive entry on the tap on a pivotal level. The conservative entry is on the break and the retest, guys. Yes, if you're already in the aggressive entry, when this breaks and retest happens, it gives you more confidence to stay in the trade, guys. Yes? Guys, now, everybody understand this. Please confirm, guys. So that should be your trade today, and you should have made the money already. Yes? Your entry was nearly at 122.65 and your close was at 122.94. It was 30 pips trade, guys. How many pips? 30 pips trade, guys. How many pips? 30. That's right, sir. That's right. Now, guys, stop loss placement. If the price breaches this, now this is the stop loss. Had the price break and retest outside, guys. If that has happened, you would have exited your trade. Make sense, guys? So you want to see this support becomes resistance, you can exit and get out of the trade. This is what I'm telling you to get out of the trade. But of course, guys, in this situation, you will not get out of the trade until the price breaches this channel trend line, guys. Yes, you guys understand this? Because price can always find support as at the secondary level and bounce back above the pivot, but that can always happen. Battery to pakadaiye, battery khatam hone lagi. Okay, guys, please confirm if you guys understand this trade. All of you guys, I've used lecture 1, I've used lecture 2, and I've used lecture 3, and I have taken this trade, guys. Yes? Okay, guys. Now, what next I'm looking at? You can keep on following one pair. Yes, you will always move your stop loss to break even. That's right. Always move your stop loss to break even. Always when the price goes at least 15 to 20 pips in profit, guys, not before that. Okay. It's pretty simple, guys. It's pretty simple. Now, guys, the price is rejecting from here. Yes. Price is rejecting. So, guys, you can, if the price rejects here and you have a bearish pattern formation, if you see a bearish pattern here, you can take a trade, sell trade. Just follow the rules, guys. You can take a sell trade. Try and understand this, guys. Sell trade. This is risky trade against the trend. Against the trend, the trend line support is close by. So you need to keep all these points in mind. Yes, you guys understand this, guys, if you're taking this trade. In scalping, in intraday trading, you have to understand that you have to exit and get out of the market many times. So you will have losing trades. It all depends the kind of trader you are, because normally what happens, the market keeps on moving within these pivotal levels. So you can really capitalize on every pivotal level. Makes sense, guys? But remember, if you took a trade and the price breaches this, holds outside, you will get out of the trade. Why I'm taking this trade? I am taking this trade based on this channel resistance, and in anticipation the price will respect this, right? The channel, and the price will go to the downside. But this trade is not confirmed trade until the price breaches this. Make sense, guys? So price can find support, guys. You need to understand it's a sell trade, but it's a risky trade against the trend. Trend line support is close by, so you should not take a trade. But if you want to take a trade, you can always take a trade. But try and understand if it hits your stop loss, what was the reason? You understand this? That's right. You can wait for the trend line break. That is the prudent way to approach. But I'm still suggesting you aggressive trading in scalping or intraday trading will be opening the trades from a pivotal level by just seeing a reversal pattern. It will still work more than 65%. Make sense? Guys, I'm an aggressive trader. I'm very good at closing the trades. I take a trade at every pivotal level. I normally take trades. I keep on playing the ping pong. I'm suggesting, guys, do not think what I do. Instead, follow the rules. You will be a successful trader. Your journey has begun in this scalping, and my journey is almost completed. Makes sense? There's a difference between your journey and my journey. You can't compare my journey with your journey. Well, I am standing at this moment in time, and we're learning from me. Makes sense? So you need to follow the rules. So please confirm if everybody understands today's first trade. Okay, is it not easy to take a trade, guys? Guys, again, you will have the losing trades. You will have losing trades. Everybody loses the money. That's how the Forex works. All you need is to keep on applying these rules. You will see yourself extremely successful. Guys, in this trade, your stop loss risk and reward was 1.3, I think. It was 1.3, I think. Guys, I'm in a sell trade. It's going fine as we speak. Let's see what happens. Make sense? Exactly, sir. That is the key. That is the key. That is the key. Okay. Now let's consider more. Let's consider previous day, yesterday, the trading opportunity yesterday, right? Yes, you should. Okay, guys, if I'm sitting on the computer, I don't put a stop loss, right? I don't put a stop loss whilst I'm sitting on a computer. But of course, if there is a news coming out, or there might be a volatility in the market, then of course I'll make sure that I have a stop loss, so I would not be surprised by the volatility. Makes sense? But again, this is a method where you have to watch every 15 minutes candle close to decide to stay in the trade or get out of the trade, guys. This is a method where you can trade high volumes knowing you have small stop losses, and you will have a lot of opportunities within a day to trade. This was the beginning of this day, guys, just a beginning, and you already have the first trade. Make sense? Okay, please confirm, everybody, if you guys understand this. Please, guys, for trading 10 lots, I suggest you should have 100 grand in your account. Okay, please, guys, you understand this, right? Everybody understand? Okay, let's consider the yesterday trading opportunity, guys. Yesterday trading opportunity. This is where the day begins, right? Again, the question is, what zone is this? Buying zone or a sell zone, guys? Anyone? Okay, so what kind of trading opportunity you will be looking to do? Buy or a sell trade? Buy. Okay. Market opens here above the pivot, right? I will not take a trade because I need the price to test or go near the pivotal level. Yes. Price went up, price went down, price went up, price went down, and eventually price came to pivotal level. Can you see this? The price came to a pivotal level, not only, but it was a channel support level as well. Can you see this, guys? Two reasons. You guys understand this, right? Everybody understand this? This is your hammer. Two hammers here. Yes, everybody understand this? Next to the pivot, right? Okay, good. Guys, remember, use your counter trend lines. You understand this? Everybody understand this, right? Everybody understand? Say yes, please. All of you guys, try and understand this, guys. Everybody understand? I took an entry. I have taken this entry. The price went up, the price came down, the price went up, the price came down, the price was holding around these levels, holding above the pivot. I'll stay in the trade. The price is in the channel. Yes, and eventually what happened, guys? Use your trend lines. You will be using your trend lines like this to develop the trade, and eventually the price rises and the price hits the next level, guys. Everybody understand? Say yes, guys. Come on. Your stop loss was nearly, if your entry was at 122.36, your stop loss will be at 122.50. 16 pips stop loss, guys, and your profit was at 122.77. This trade was more than 50 pips. The risk and reward in this trade was 1-3-4. You understand this? Everybody understand this trade, guys. Look at the risk and reward, guys. In my training, the risk and reward is the key. Without a good risk and reward, you will never be able to become a successful trader. Your system will never be able to become a business instrument if you're trading 1-1. And a lot of scalpers just trade 1-1, right? I am giving you a method to trade intraday trading, stroke scalping, short-term trading, guys, but still having your risk and reward 1-2-3 at least. And this is the beauty of my method. At the end of the day, if you have 4 winning trades using my method, you still became a profitable trader. This is the confidence that you need in yourself, guys. You understand this? Please confirm if you guys understand this. Okay, anybody has any questions so far? Anybody has any questions, guys? I'm showing you entries, exits every day. Now listen this, listen this, listen this. Every day you will be taking entries precisely like this. So if I do 100 webinars with you, I will be showing you 100 examples precisely using the same method. It goes in my favor, good enough. If it doesn't go in my favor, I'll take a loss. I'll look for another entry using the same principle. Consistently applying the same principle without failure, consistently applying the same principle without failure is the vital factor and a key to success in this method. You understand this and any other method of trading. So please confirm, guys, if you understand this. Okay, let's go back a day before. Let's go back a day before. Let's go back. This is the day, guys. Again, tell me what zone is this, buy or sell zone, guys? You will have your trend line like this, guys. Yes? This is where the day begins, right? This is where the day begins. The price came close to the pivotal level. Yes? What is this candlestick? Yeah, just wait. We will see an example in a second. Just wait, just wait. I'll show you. So this is a hammer. You guys understand this? Everybody understand this? Say yes, please. Come on. Guys, effectively use your trend lines. Effectively. This is the conservative entry. This is aggressive entry. That is your conservative entry, guys. Yes? Yes? Everybody understand this, right? The price starts rising and the price hits its target. Yes, you guys understand this. You could have gone out of the trade here if you like, exit the trade, or you don't even need to exit this trade, guys. Knowing this, if this is respected, the price might continue going further to the upside, right? So the price came back, tested this area, guys, continuation to the upside. You might easily have stayed in the trade until this level, guys. So please confirm if you guys understand this, all of you. Please confirm, guys, all of you. You guys understand this, right? And guys, I'm going to show you now. This is an art to trade, guys. You guys understand this, right? Aggressive entry, price rejecting, bearish engulfing. Can you see this bearish engulfing candlestick? This one, not these small candlesticks, bearish engulfing candlesticks. The first bearish engulfing candlesticks. Everybody see this, right? So this is my sell trade. Sell, aggressive entry, guys. Knowing the price is in an ascending track, it's against the trend trade. There are a trend line acting as support, guys. Yes, but remember the principle is that the dear traders move the market between one pivotal level to another pivotal level. It's pretty likely the price keeps on doing ping pong within these levels. They take priority over any other trend line because those are the primary levels. Make sense? You understand the rationality, what I'm giving you here? Again, guys, mindful, it's an aggressive entry. I took this trade and I marked my reference line just to keep an eye on this, guys. Stop loss is, okay, stop loss is above this area, guys. The price came down, the price went up, fails to break this area. I'll still stay in the trade. And eventually the price went all the way to these levels. I exit my trade. You understand this? Please confirm if you guys understand this, right? Guys, please confirm if you understand this. And again, guys, I'm going to show you an aggressive entry. Guys, you have the candlesticks, hammer, hammer, and engulfing, right? 3 candlesticks. By the rules that I've given you, hammer and more, forget the morning star, hammer and the engulfing candlesticks, that's your buy trade. Again, aggressive entry, it's a tap with the candlestick, formation. Get on the trade, price holds, and you still made that much pips that day before the day ends. So you guys have the first buying trade, the second sell trade, or the third trade. You should have made more than 100 pips on just trading this pair, only trading this pair. Makes sense? Guys, the principle which is different from trading normal markets, normal price action trading is this. This is the principle. Follow the institutional trader. Institutional trader is playing between one institutional level to another, one pivotal level to another. Well, that's what he's been doing this, right? Based on that principle, we are opening the trade when we see a candlestick formation at a pivotal level. That takes precedent over any other trend lines. Make sense? But remember, you need to have the understanding the trade with the trend is class A, less risky trade. Counter trend trades will always be riskier, because let's say this is a trend to the upside and that day is the day of breakout. In that day, then the price will continue going to R3 levels or R4 levels. Make sense? So you wouldn't even see this small retracement and then continuation to the upside. Make sense? So that is the danger. The breakout days, the price, you better be on the side of the trend. So remember, whenever you take a trade against the trend, you need to be mindful it can go against you. You get out of the trade straight away. Makes sense? So please confirm if you guys understand these examples, guys. I've just shown you 3 days of trading, and you should have more than nearly 250 pips within those 3 days. Makes sense? By following a basic rules of the price action, you need extreme focus. You need extreme focus while trading. It's not a piece of joke. You put the trade and you start walking in the park. It's not a kind of trading. You really focus what's in front of you. The advantage and beauty of this method is you can trade high volumes with high. You can trade with high volumes. You'll have multiple opportunities to enter into the market within 24 hours, right? There are many opportunities. Now see this. Let's see this. It's making, that's right, guys. So guys, I have a sell trade here and the price is making a hammer, right? If the price breaches this, I will get out of the trade. Okay. I'm telling you, this is not a good trade, class B trade. So it all depends on you. My advice is trade with the trend. Now you've taken the first trade, skip the second trade, let the price come back to either pivots again or are above R1, right? So that you can start buying again. Or that's my advice is, but of course you can always keep on playing within this ping pong method. It does work more than 65%. Makes sense? Yes, you will eventually get out of the trade, Raj, if the price breaches R1 and close outside. Yes, sir, that's right. You guys understand this, guys? This is a method. You can keep on doing ping pong. Makes sense? Okay, anybody has any questions so far? Okay, guys, I'm going to show you a trading opportunity yesterday. This is your Australian dollar. Everybody see this, right? H1 time frame, trap the price. Now, this is a day of breakout, guys, right? You need to be better on the side of the market. Makes sense? You guys understand this, right? Okay. Guys, that is where the price is. I'm going to show you the yesterday trading opportunity on this, okay? Now go to 15 minutes time frame, guys. Previously, the price breaches the trend line, right? Breaches the trend line, and that's where the day begins, right? Guys, I'm going to show you how you're going to take the loss. I'm going to show you how I'm going to apply the same principle of entries, exits, and I'll take a loss and I'll take a profit. We'll do the count after that and see how many pips I've made. Okay, guys, everybody ready? Good, good. The day begins, right? The day begins. The price is holding above the pivot, right? Yes. Yes. Come on, guys, say yes. This is my reference line, right, guys? The price holding above the pivot, guys. This is bullish engulfing candlesticks. Applying the same principle, applying the same principle. Just see the funny thing in this method. This is your buy trade based on the same principle. Price is okay. Price is in a descending. It's in the sell zone, by the way. I can tell you this. Based on H1 a trap of the price, guys. Price is in a sell zone. Makes sense? Everybody understand why it's in a sell zone? Because price breaches this trend line, right? That's right, broken channel. That's right. But let's say now let's consider this. Guys, I'm going to take a profit. I'm going to take a loss. Forget the high lows for a second. Your identification, if it's a buying zone or a sell zone, will be based on the channels. Let's keep it simpler. High and low will bring confusion in your mind. If in an ascending track, it's a buy zone. If it's a descending track, it is what? It is what? Sell zone. That's right, sir. Thank you. Okay. Using the principle, guys, for instance, if this was a long buying track, bullish engulfing candlestick, I purchased, right? I bought here. Yes? Guys, yes? I took the trade. The price rises. The price breaches the trend line, guys. You'll get out of the trade. Okay, please confirm if everybody understand what I just did. Everybody understand that this was your losing trade. Guys, my entry was at 75.39. I taken a loss at 75. Okay, my entry was at 30, now 40, 75, 40. I've taken a loss at 75. Let's say 25, guys, 25. So how many pips I lost? 15 pips. Somebody write it down. I've lost 15 pips on the first trade. The day begins. Now, this is the beauty of this. Never be scared, because you will have opportunities. You will have more trading opportunities. Your stop losses are small, right? But remember, you apply the same principles, okay? Apply the bloody same principles. You take an entry here. Break of the trend line, break. That was the break. That was the retest. I'll get on the trade here. Makes sense? Sell trade with the trend. Break and retest of the trend line means conservative trade, which is a conservative trades, bearish engulfing candlesticks, right? That you got to have the balls. That's right. I hope we have just male participants here, but yes, you need to have the balls. Psychologically, trading shorter time frames is a test of nerves, because imagine you can have 5 losing trades to begin your day, guys. 5 losing trades to begin your day. The key is that you will still be applying the same principle, same method, without thinking of profits and losses. Do the math. At the end of the day, you will be a profitable trader. I'm doing it right in front of you right now. Okay, we took a sell trade. Now, somebody write it down. I took a sell trade at 75.32, and the trade goes to this level, guys, because I wouldn't have chance to close the trade. Straight goes to the downside, 75.11. So I took a trade at 75.32. It went to 75 or 10, 75.10, 21. Okay, write it down, 21 pips, right? Then, guys, I'll take a sell trade here again. Make sense? My second sell trade, right? Everybody understand this? Guys, I took this trade at 71.08 and I've taken a profit at 74.87. How many pips? 75, 10, 19. Okay, keep adding. I will take the total count in a later from you guys. Okay. This is your reference line. You will never take a buy trade without the price breaching this. We are in a strong bearish trend. Makes sense? You guys understand this? Okay, guys. Now again, we took another sell trade. It's a trendy day. I opened the trade at 74.86. I closed my trade at 70. I wouldn't even need to, okay, I closed my trade at 74.60, let's say 70, 75.60, 74.86 and 75.60. How many pips, guys? You didn't even need to close none of this trades, but still I'm counting with you from one pivotal level to another and multiple entries, so that you, and to show you, even you take a loss, it doesn't matter. Make sense? Another trade, guys. Everybody understand this? Everybody understand this, right? Another trade here, guys. Okay, this trade is from 75.63, closed at 74.39, guys. How many pips? 74.63 to 74.37. Okay, this kind of this trend, it doesn't happens every day. But guys, remember, the day the market is trendy is the difficult day for you to trade, because you will have, or you might have, one losing trade that day. Make sense? Make sense? Make sense, guys? If the price is ranging, it's pretty easy, ping pong. But the price is trendy, you will see some problem with it. Maybe one or two losing trades. It doesn't matter. Once you have the losing trade, you will always try to trade with the trend, and you can really suck the blood out of the markets. Make sense? So please confirm, guys, if you understand this. All of you understand, please confirm, guys, all of you. And guys, this was the trade today from a secondary level. Bearish engulfing, this is a trade from the secondary level, guys. It's not a quality trade, it's a trendy trade. This is no pivotal level. That is where the market opens. I'm expecting the price to go to this pivotal level today. If it goes, it's a good trade, but it's a class B trade. Do you guys understand? It's a blind trade because it's not from any pivotal level today. But you guys do the maths and tell me roughly how many pips should I have made yesterday, including that loss, guys. How many trades should I have made yesterday, including that loss, guys? Anybody would tell me a rough number? 75. Okay, good. So is 75 pips are bad, guys? And the key is you will only take one trade on a pair at one time, guys. Until you get a results on that trade, you will not open the second trade. Of course, I will be discussing these rules of money management in the later lectures. So please confirm if you guys understand how you're going to take a loss using the same method, how you're going to take profits using the same method. The key is using the same method. Yes? Guys, does it make sense to you guys? Does it make sense? Are you enjoying this? Good. Good. This is brilliant. Trust me. You don't add on trades. You just trade one trade at a time, guys. You don't add on a trade. These examples are, you open a trade, you book profit, you find another entry, you book profit, you find another entry, you book profit. But in time, in due course, you will have the confidence to stay. You should have stayed in. I have stayed in just one trade. I shared with you. I made 100 pips. You could have easily have stayed in just one trade, guys. Make sense? There's no reason for you to close these trades. Make sense? But still, to begin with, I want you to focus from one pivotal level to another and book the profits. Make sense? Don't try to be over smart. Everybody understand, right? Okay. Euro US dollar. H1. The drill begins from H1. Yes? You guys understand this, right? Yes, guys, everybody understand, right? This is where your day begins, right? That is where your day begins, right? The day begins here. I'll mark this, and I'm not going to take the trade. This is where the day begins. Everybody understand this, right? Guys, the price breaches this trend line and retested. This is your blind trade, class B trade, guys. Yes? You guys understand this, right? Bearish engulfing candlesticks formation. I'm going to make it bigger for you. The price breaches with the bearish engulfing candlesticks. That is the first reason the price came back, fails to break the high of this previous double top, bottom top formation. The price breaches secondary level. This is a sell trade, but a secondary level trade, guys. And that is where you exit the trade, guys. Makes sense? Everybody understand this, right? Okay, good. Guys, then you will take a trade based on these candlesticks here. Sell trade. These are all your sell trades. Sell trades make sense. At every time you could have taken these 3 opportunities. That's right. It can surprise you. Class B trades might surprise you. They are not quality trades. I can tell you this. Again, guys, you could have exited the trades here. Make sense, guys? You guys understand this? Guys, you should have made decent pips today on this, right? And guys, you could have easily stayed in the trade using this trend line, and you would have you wouldn't even need to close the trade on this retracement, and you could easily had closed the trade here. Make sense? So please confirm if you guys understand this. Please confirm, guys. Everybody understand this? Please confirm, guys. Effectively using your channels and effectively using the trend line will really help you to formulate your trade and develop your trade, guys. So please confirm. It's an extremely choppy market on euro US dollar. Yes, it was an extremely choppy day, right? And still you should be able to make the money out of it using the method I've given you in front of you. Make sense? So please confirm if everybody understand this. Please confirm, guys. We will take a loss using the same method. We will take a range using the same method, guys. Same method means same method. GBP US dollar. Let me give you examples. H1. What is the drill on H1, guys? Anybody? You guys understand this, right? 15 minutes time frame, pretty simple. This is the day. Adjust your trend line, guys. When the day begins, my day begins, this is the trend line, right? The trend line is based on these tables. That is where the day begins, right? Everybody understand? Trade from the secondary level, guys. I wouldn't even need to close here. Instead, I should have closed my trade here, guys. Can you see this? I wouldn't even need to close my trade here. That's where I would have exited my trade. Easy weasy. Yes? You guys understand this, right? This was the blind trade. Yes, sir. That's right, sir. That was the blind trade. Guys, now see this. Try and understand this. The price came up. The price came up here. The price came up. For instance, let's say you took a buy trade. You won't take a buy trade knowing there's a resistance, but let's say you took a buy trade. It doesn't matter. Again, you're not going to take a trade. I'm giving you a worst case scenario, the one of the most stupid trades you'll ever take. A buy trade here. Let's say the price went up, the price came down, the price went up. You should have gone out of the trade here. Yes? You guys understand this, right? We took a loss. I took a loss. The price made a high, right? Established a chart tracks. Guys, you see this. Now, if the price respected here, you can get on the trade and you will be looking to selling opportunities now, guys. This is your sell opportunity. Class B trade. I'm giving you examples here. Class B trade. Or this is your selling opportunity, Class A trade. And guys, you will only be looking for selling opportunities because what track is this? What track is this? That's right, sir. So we took a sell loss. We took one profit. If you took a trade here, that was your profit, right? The price went up, rejected another entry. So guys, how many pips you should have made on this pair, including the loss, plus and minus? Still, you should have made easily nearly 50 pips. Make sense? Guys, again, if you are, once you get experience with the price action, you would definitely know you're not going to take a trade on this. But again, guys, let's forget, just follow the rules and see how effective they are. So if you follow my rules without using your brain much, right, you still end up being a profitable trader. Now the key is that you will eventually learn in time to control the trades, guys. Okay, everybody understand? Say yes, all of you. Okay, let's go. H1. What pair is this? You guys understand this, guys? Good example. You guys understand this, right? What is the channel? What is the channel, guys? Name the channel. Easy peasy. Name the channel. Good. 15 minutes time frame. So first of all, when you do the trap of the price H1, you can filter out your pairs. You can only, and you should only be trading that pair which is really forming a beautiful channel. Make sense? If the price is not making a decent channel, skip that pair, move on to the next one. That is the key. This is how you filter out your pairs. Of course, I'll go into more details in lecture 2, guys. You understand this? Guys, the price is in a descending channel, right? Again, see this. You guys understand this based on this, right? So I'm not going to buy here knowing this is where the resistance is. You understand this? Channel, descending channel, right? Okay, guys, so where would I take a trade then? This was your sell trade today. Why you're not going to buy here? Pretty simple. It's a descending channel. I want to trade with the trend. It's an extreme trend. Again, guys, this is your sell trade. Sell trades here. Guys, tell me, was there a problem with any of these trading opportunities? Tell me. I'm showing you multiple entries. We could have taken one of them, two of them. Make sense? It's important. It's important. It's a wick. Okay, guys, you took a trade on this. You took a trade on this. You would have been had a stop loss hit, because if I'm taking a trade here, my stop loss will be here. If I'm taking a trade here, my stop loss will be here, guys. Make sense? So if I took a trade here, this would have spiked me out. Yes. But then I have taken another trade here and easily made the profit. Make sense? Yes, it would have spiked you out. That's right, sir. That's right, sir. Okay, guys, try understand this. Try understand this. Exactly. Stop on. Try understand this. Guys, it's advisable, strongly advisable that you trade with the trend. Why you trade with the trend? The day the market breaks out, the way it did on Australian dollar, the way it did on gold yesterday, right? Today, if you are not trading with the trend and you try to take counter trend trades, you will be burned and you will lose all the money. Make sense? You understand this? My advice is trade with the trend, trade with the trend, trade with the trend. If you can't trade with the trend, that you need to understand it's a counter trend trade I'm taking. It will be risky trade. I need to get out of the trade, and you need to accept that the trend has changed and you need to get on the trend straight away. So these sort of acceptance is all psychological. It takes time. It's not easy. I can tell you this. Guys, you understand the entries and exits. Please confirm if you guys understand the entries and exits. Okay, good. I'm going to show you the last trading opportunity, guys, before we end this session. Everybody understand this, right? Everybody understand this, right? I'm going to show you the trading opportunity yesterday, guys. This is where the day opens, right? Descending tracks. What is the trend? Well, that is it, guys. You made the money out of it. Again, you could have bought here. Price holds, you could have bought here. Again, guys, use your trend lines effectively, please. Develop your trades. Make sense. Please confirm if you guys understand this. One sell trade, one buy trade. In a day, one trade on a pair or two trades on a pair is fine. If you have 3 pairs open, guys, you will have at least at least 6 trades, 2 trades on each pair. You should have made your 100 pips plus and minus easily. Make sense, guys? The day opens, the price came back, and you see this. Guys, you understand this? Is there a problem here? I can show you so many examples, guys. Now, the key is, guys, you need to psychologically have the strength, psychological strength to accept the losses, to change your analysis. All these things are not easy psychologically. It demands a strength, psychological strength. You can develop. You can never have that strength within days and weeks. It will take you some time. You understand this, guys? And whoever develops this will be a trader who will be sucking the blood out of the market. People talk about 20 pips a day. I'm giving you a method by which you can make more than 100 pips on a single pair. Make sense? Say yes, guys. All of you say yes. Okay, guys. Now I'm going to have another session with you, hopefully tomorrow or the day after, in which I will discuss further entries and exits and slightly more in details now. Okay. So today I want you to go back, try this method, try your entries and exits, buy and sell from the pivotal levels, trap the price, see where you would have taken a trade. And guys, be consistent with your entries and exits and take a loss, take a profit, take a loss, take a profit, take a loss, take a profit, and count and see how many pips you've made. Be honest with yourself. We call it paper trading, guys. Try this until you receive instructions in your Telegram groups when we're going to have the next session. You guys understand? Say yes, all of you. Okay, you can select any pair to trade to practice with. Of course, I will discuss the pairs in my lecture 6 and 7, guys. Yes, you guys understand this? Okay, guys, thank you very much for joining in. I will take your questions in after stopping the recording, guys. But again, you need to practice this. It's not a walk in a park. It takes a lot of practice, but I cannot make Forex more easier than this, James. James, am I not right? Rafia, am I not right? Simon, Casey, come on. Libert, come on, guys. Q. Okay, good. Thank you. Let me stop the recording, guys. Thank you very much.